This chart shows the euro versus the US dollar. Last week, the market moved upwards with these rising highs and higher lows. That means that the market is in an uptrend. It reached this key level of resistance. It didn't frankly went through that to see if sellers are strong to dominate this part of the market. But what we see is that so far, buyers are not willing to bail out their positions. What will happen next week is if the price breaks and closes above these highs, we will see the price moving all the way to the next key resistance. But if we treat it as a supply zone and the price closes above it, then definitely it will rally until 1.17. On the flip side, a break below the Friday's low will push the price lower to 115. And if that happens and the market break also that upward trend line, then the next decline will find the price around 1.1562, which is another key level of support. This is the Great British Pound versus the US dollar. We see the 4-hour chart. The price is occupied within this trading range. Currently, the buyers looks a little bit more promising than the sellers. The market made a higher high but failed to sustain higher prices. From Monday onwards, if the price managed to reach this previous swing high and breaks above it, the next key level of resistance, it's going to be about 150 pips higher, and that's the 1.3369 resistance. On the other hand, if the market consolidates for a while within this bearish Marabozu candlestick and drops, the first key level of support will be around this previous Fridays and Thursdays lows, and the Wednesdays lows will become the ultimate support level for the sterling. A close below that will push the price further down to 1.300. This chart shows the Australian dollar versus the US dollar on the 4-hour time frame. Despite the Wednesday's rally with a strong higher high formation, the market from Thursday onwards reversed 100% of the move and reached this swing low. The price formed this pin bar, and from then the buyers tried to push the price higher, but towards the end of the New York trading session, they were unable to sustain bullish pressure. Now, pay attention to this. If the price breaks and closes below this support, it will push the market all the way down to the next one. And the reason is that this key level of support is a major swing low, and the break of a major swing low often leads to a key trend reversal. On the other hand, if buyers appear strong and they push the price back up, the recent swing high becomes the first key level of resistance, and this swing high right here becomes the next key level of resistance. This shows the US dollar versus the Japanese yen on the 4-hour time frame. Despite we expected a weak US dollar last week, from Wednesday onwards it showed some bullish sentiment. It rejected this 153 key level, and since then the price pushed to the upside. From Wednesday onward, we can say that the market is kind of consolidating, with the price bouncing between this resistance and its support. A break above this resistance will push the price even further higher, just close to 156 level, but a break below this key level of support will push the USD Japanese yen further down to 152.8. This chart shows the performance of gold last week. Surprisingly, the market since Monday was rallying, reached the 4,245 US dollar, and from Thursday onwards, the price declined almost to 4,000. Actually, it reached exactly the 4,032 US dollars. What happened? Sellers appear super strong during the New York trading session last Friday, and the market since then remain inside this long bearish candlestick. A break below this bearish candlestick from Monday onwards will push the price even further down, and it will break the 4,000 level. But if the price moves upward and fills up this fair value gap, and if it continues further up, it can reach the previous week's high at $4,245. Although there is a long way until this level, but let's keep an eye on that because anything is possible in the markets. Regarding the WTI or US oil, the market kept declining within these two parallels. There is no clear direction whether it's a strong buying or strong selling pressure. Only if the price breaks above these highs, we can consider that buyers are in control, or if the price breaks below this low, we will consider that sellers are in control. In these cases, it's worth looking at the higher time frame, and you can see that the weekly chart for third week in a row remained with 3 inside account. And because this found that key level of support, it might push the price further to the upside. But we don't trade what we think it can happen. We go down to our lower time frames and trade the swings and the market structure. And right now the market is moving sideways. Natural gas, the price rallied last week with significant higher highs and higher lows. Currently the price is in the middle of this impulsive upward move. If we draw Fibonacci from this swing low to that swing high, the market bounced from the 61.8%. That's the Fibonacci golden ratio. And we are expecting the buyers to appear strong and continue the move to the upside. If they fail to push further up and we see a decline, then the key support will be tested as the first level of support and onwards. A break and close below here will find the price at the next key level of support, which is about $4.08. This is the chart of platinum. The market is clearly moving sideways. The only way to trade this market is to pick up the bounce from support or to sell the rejections from resistance. But for high quality trades, it's better to wait for a clear break and close below support or above resistance. Trade with the momentum. The chart of Cooper shows a bit of balance between buyers and sellers. We see a couple of long bullish Marabozu candlesticks and also sellers, they appear strong from this 5.22 key level. If the price drops, the first support is going to be this one here and the second down there. If the price advances, we want to see a break and close above this high to get convinced that the market is still in an uptrend. Bitcoin versus the US dollar. It's good to check this on the daily chart. The market is driven by incredible selling pressure. The next key level of support is the $90,000. If today's candles remain as an inside candlestick and tomorrow's candlestick also remains as an inside candlestick, this can be a high quality trade to find ways to short this until this key level of support. The only technical level to look for buys is if the price breaks and closes above $108,000, because then we will have a break of market structure, which means that buyers will be in control. Solana, similar, strong selling pressure. The price is currently trading at $141 with the next key level of support, the 126. So let's keep an eye on that one to see if we can pick up some bounces or we can find some rejections to sell it for a further decline. And the XRP, this becomes a promising for more selling pressure because the price compress around this key level of support, and that means the sellers might gonna appear strong to break and close below these levels. If this happens, then the next reference we see based on the technical charts is the $1. So from the 2.10 cents, we can see the XRP moving all the way down to $1. Of course, this won't happen overnight. It's going to take some time, but from the technical analysis level, this is what we read on the chart. And if we have the opportunity to trade it to the short side, we have to understand that the buyers at this moment can favor the sellers.